Welcome to Shortview Trading. This is your morning market hit for Tuesday, April the 28th. What matters today for traders? Markets were strong again yesterday with the S&P up around 1.5% on the session. This time global markets were led more by cyclical parts of the global financial landscape, with the DAX up 3%, the Russell up more than that, and the transports up around that sort of level. And the Nasdaq underperforming, up only around 0.5% or so on the session. But standing back from it, we're just back at the top end of ranges. If you look at the S&P and the Nasdaq, they're trading at the top end of that range they've been within in the last couple of weeks. Equally, if you look across Europe and Asia, it's a similar sort of picture, albeit those indices have retraced much less of their losses than the S&P and the Nasdaq in particular. Of course, the last few weeks has been led by tech, albeit not yesterday, and so the Nasdaq and the tech-heavy S&P have retraced more of their losses than other key indices. Having said that, short-term models are now back on sell, and global equities is testing its 50-day resistance level. 50-day moving averages have now caught up with where most markets are. That is, the markets plunged sharply in March, and the 50-day moving average has moved down over the last month. As such, we're now at key resistance levels at a whole host of indices as they've chopped sideways for a couple of weeks, waiting for that resistance level to catch up with them. So this is quite a key moment. And interestingly, in that respect, a whole bunch of short-term models are back on sell. Perhaps most obviously, the Nasdaq fund flows is at high levels, as that's been a popular place for investors to put money to work in the past few weeks. But on top of that, other short-term models also have a sell message. The VIX RSI is back on sell with regards to equity markets, with the VIX having fallen sharply in recent weeks. Our breadth over extendedness indicator is back at high levels, again on sell. While there's little downside protection in portfolios, as shown by the put to call ratio, and of course consistent with that breadth model, the stocks above 10-day moving average is also back on sell. So we're at the top of the range, but short-term models are starting to trigger sell signals once again, added to which there's a number of market signals which are questioning the rally we've seen in global equity markets. They include the weakness in emerging market currency index, which is back at its low levels of the past few weeks. And the 10-year bond yield, whilst it was up a bit yesterday, is not far off its lows in March. Over and above that, we've seen some renewed strength in the yen, which is an indicator of risk aversion. Emerging market equities continue to underperform developed market, and there's a clear divergence between the VIX and the high yield spreads, which is interesting, which you can see in the chart in front of you now. In other words, high yield spreads are questioning the move in the VIX, despite the fact that the Fed is backstopping the high yield space. And on top of all those, of course, oil was weak again yesterday. So we remain cautious about this relief rally and cautious about this 2-week sideways period. Interested to see if the markets have the ability to break out from here. Our signals and indicators suggest not, or certainly not meaningfully. Often markets break for a day or two out of ranges and test the bears, but that 1 to 2 day breakout is not conclusive. So be wary of that. We remain committed to the short side of this market. For full details on how we're playing this, please see today's daily rag, available to subscribers and on the website. So what are we watching today? Well, in terms of key macro, there's some interesting UK retail sales survey out at 11 o'clock London time, which will give us a take on April. We've also got US consumer confidence out this afternoon and a Richmond Fed manufacturing survey. And over and above that, of course, US corporate earnings continue with a number of cyclicals today, including UPS, Caterpillar and 3M. And of course, we continue to watch anything from policymakers to price action and evidence of financial stress easing or tightening in markets. So that's it from us. That's your morning market hit for Tuesday, April the 28th. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter and or Facebook. Simply search under Shortview Trading. Thank you for listening. Stay safe and trade well.